What is up, everybody? Ted here with some bodies and wicks, and yeah. So today was the day. Today was the day that the Lord hath made. Or I'm sorry, had to do that. Uh, no. Been calling it for a while. Been waiting for it. Bitcoin did at least 41,330. And why 41,330? Well, because of that is when the last swing high that we have before the major dump down. And I'll show it to you on the charts in just a second. But I knew it was going to get above it. We had been showing bullish potential. And I knew when we would get above it. Actually, I didn't know what would happen. I didn't know if it would get above it and then drop straight down, or if we would get above it and stay above it. But I had a pretty good feeling that once we got above it, we would stay above it, and we did. Just because once price gets to a liquidity area, an area of where high liquidity sits, there's, especially if you were watching it. I mean, it happened right off as soon as I got off of work. It was right around 3 o'clock. If anybody was watching the charts today, how crazy the charts were going, and it was. Here, let's just go to the chart so I can show you more of an easier depiction of what has actually happened. So here it is. Let me get my ugly mug off of here as well. That might help out just a little bit better. Logitech. There we go. All right. So I am in the 15-minute, but what I was talking about the last big drop before. Okay, so if we kind of crunch this down, and you can see we have the ultimate high way up here back in May, and April, was it? Yeah, April. And then we have the fall off. Boom, the fall off down through one monthly gap to the second monthly gap, fair value gap, that is. Boom, you have two equal lows here. Comes back up, and then that is the last swing high I'm talking about. So now that we've got a better depiction of what is going on, two equal lows, comes up, boom, drops off, sells below that, takes out this liquidity. So now that it's taken out this liquidity, I am waiting for it to come back and take out this liquidity. And it takes a while, it moves up, and it just slowly moves down. But until it gets to the bottom of the monthly fair value gap, which is when I finally got in. I told you guys this a couple weeks ago, or whenever it was, July 20th last week, that this would be the entry point. And I also put quite a bit. You want to talk about down cost averaging? That's where you down cost average. That's where you put 90% of your down cost average at. You don't put 10% here, 10% here, 10% here. No, you put it all down here. And that's what I did, and I'm glad I did. And so like I said, as it's moving up, I'm on a 4-hour chart, by the way. So as we're moving up, and we can see it is cracking new highs, the full bodies, cracking new highs, full bodies. We have now changed structures. We have now changed the market structure to be in a more bullish structure rather than a bearish structure. So now all I'm looking at is buying opportunities from this point on until I can find a reason to be bearish. And I'm still in that same mode. I'm still in a bullish mode. So, uh, I mean, like I said, and this was just the spike that came up. I mean, this really had nothing to do with it. I think what I have highlighted here, if we actually get down into it, there's a 5-minute like order block or something in here. I'm not 100% sure. Or 15-minute. Let me get down to the 15-minute, and we'll get down to the brass tacks of what I have here in this orange one. I had 2 orange ones laid out, by the way. I think there was 2 fair value gaps within that area. So I was looking to see, once it got into that area, would it back off? How far would it back off? Yada, yada, yada. And this was the area that I was watching today, because this was the area that it was coming up to, and it was playing around here. And it just, or was it even this area? I think it was even lower than this. No, it was this area, I think. Yeah, it was this area. And it just kept wanting to, play around, and you could tell it would come up here, and it would get close, and then it would sell off, and then all of a sudden you would see anybody who was on any kind of futures, it would just start turning red, and you would see it be like 30% short versus like yeah, 30% long versus like 60% red. And I was just laughing. I was like, I wasn't laughing, sorry, but I was like, come on, people, you guys know better. I feel like you should know better than this. If it's we've struggled for how long, and it hasn't gotten above this. Eventually, it is going to crack this at the very, very minimum, and then crack this. Just because this is where the liquidity is. This is where everybody thinks it is going to sell off. So smart money would obviously say, no, as soon as you get up here, we're going to buy through it. Why? Because so many people are selling that we're going to take their money. So that's exactly what happened. And as you can see, yep, that's what that orange is. That is a 15-minute fair value gap. And if I think I have, yep, if I wanted to draw another one, I could do the same thing. So there was 2 15-minute fair value gaps, and also that was just, I have this red line here. That red line would also be representative of a bearish breaker, or not a bearish breaker, a bearish order block. So once it got up to that point, I was watching it, waiting for it to hit, back off, and then go full steam ahead. But we got that way later than what I thought we would get it. So here is your 15-minute order blocks if we want to get them close enough, right? So this one came up, of course, came into 15-minute order block, fills it, boom, falls out. All right, so that's when we had this whole week, almost. I feel like it was the entire week. Geez, it was only a couple days. Well, yeah, I mean, it pretty much was the whole week. It felt like it was just going back and forth and seeing what it was going to do. But, that's where you got to stay ahead of the game. Mark out your fair value gaps ahead of time. Know where your mitigation blocks are. Know where, it could possibly fall to. don't jump in, way up here whenever you know it's going to pull back down. Instead, set limits, down in these fair value gaps like I did. And here I have a low mitigation block. Of course, came down in here quite a few times. And honestly, I didn't think it would get below this. Because I did buy at the low points almost each time it came down through here. And I even had a buy limit, or I should say a buy stop, set right at the entry of it exiting this. So then I had that, and then it came up, and then I woke up this morning to it all the way down here. And I was just like, oh well, so what? And the only reason I was like, so what, is because I knew it was coming. I knew that this was the false flag to get people to start selling, to say, okay, the resistance, everybody had thought the resistance had taken enough, it had worn it out. The resistance had taken a beating out of Bitcoin, and so Bitcoin was over. So what I do, I doubled down. I saw it at the very bottom of the 15-minute fair value gap, as you can see right here. So if we go over to, I'm going to move this over here. That's a mitigation block. So we have from here to here, that is your 15-minute fair value gap, and then you have where this wick goes and this wick goes, that is your 1 hour fair value gap. So have them both planted inside each other just to see what would happen. The first one came inside the 15-minute, jumped back out, and then once I woke up this morning, and boom, it went all the way down to the very bottom of it. Of course, I wake up at 4:30 every morning for work. I checked, I see that it's falling. It's at 5:15. It's at the very bottom of the fair value gap. What do? I double down. I don't care, because I knew the liquidity was above 41.33.0. I knew the liquidity was above here. And look at this. So 3 o'clock comes, right? What is this? 3 o'clock for me. Where am I at? This is New York time. Alright, so, well, alright, 4 o'clock comes, right? Well, this is like 5. Alright, so it's right around here. Yeah, this is it. Because it's approaching this area. So 4 o'clock comes, and I leave work. I'm watching intensely, and I have my phone in my car holster, and I'm watching the price, and I, believe it or not, I'm also scalping. Not only do I have a major position, but I'm also scalping this along the way. I'm taking positions. I'm waiting for it to fall. I'm adding positions. I'm taking positions and waiting for it to fall. I'm adding positions. And I keep doing that the entire way up until it gets near about, it was around this high. It was around 40,400 is around when I stopped doing that. So right around in here, yeah. Yeah, right about the top of this one. As soon as I got it about the top of this one, I knew games were over. Stop playing games. So at that point, I just let it ride. And it, of course, did exactly what I thought it would do. We're right through that. You can go back and listen to the videos, the last couple of videos I've said, but waiting for it to get up to 41.33.30. And there it is, 41.33.30. And then I take off about 90% of my trade, leave on 10%. as a trailer. Set my stop loss to above where my to where my entry was. So my entry was averaged around somewhere in this area. Even though I was lightly scalping in here, my uh, heavy lots were in this area. So um, my stop loss is somewhere around 40-40. So, to be honest, um, so uh, and looks like it just came down, hit an order block. Bouncing off that one very nicely. All right, see, we're still in bullish mode. We are not in bearish mode whatsoever. Even though it did get a tight, this one did come up, did fail to make a new high. It doesn't matter. We made slides sideways for a little bit, but I doubt it because I think right now a lot of people are thinking it's got to be going down soon. It's got to be going down soon, you know, and yeah, they're thinking that, you know, or they could be having a lot of faith and if they're, you know, they're trading it, you know, in futures, it could be putting a lot into it, more than what I think they are. But I think what a lot of people are thinking is that it's overextended and that it's oversold and that it's probably going to be coming down soon because I don't know how to read a chart. Um, but if I'm looking at this this to me just shows pure bullishness. I mean, yeah, we do have a let's see here, up, down, up. We do have a breaker. Right through here. Okay, so what that means, and it didn't trade through it aggressively. So if it would have traded through that aggressively, once it usually returns to it, it goes south. But it didn't. It it went through it, bounced back up, stayed up inside of it, then traded through it. Now we're seeing it pull back up into it. We might still see some more, um, pull back a little bit. But I wouldn't. If anything, it might pull back as low as, this guy here. Maybe 4,100 lowest probably it'll get. Um, but I think we're probably going to see some more bullishness happening. Um, Now, where is this fib coming from? That is a good quote. Fib's coming from the this area back here, right? Where did that come from? I have no idea. Um, so the fib is coming from this as being the low. Why is that the low? Because after this swoop down here, this came up, made an intermediate high, came down, made an intermediate low, and then we broke that high. Not only did we break that high, within that same, even though this is a 15-minute chart, if you look at it as a 4-hour chart, you can still see the significance in it. Now, kind of, as this huge candle breaks this high, right? So, and technically, well, yeah, and I have this. Here's the bottom of it. It's on the tail of, the red candles, not the very bottom, but as you can see, and it is at the part where it is coming down, and then of course we have the top of it all up here, right at the very top. That is the 100 point. So that is why we have the fib placed where it is in this section right here, and we don't have it sprawled all the way across, because that doesn't make sense. Right? You want to go from, because if anything, what you want to do is you want to do fib from here to here, and then see this pull down, and then that's where you'd base your entry off of from this fall, right? And then go up from there, and then replace your fib after it goes back up. But here, as you can see, as it falls, we'll place it at the bottom here, up to the top. And as you can see, also when it came back down, not only did it, hit the bottom of the 15-minute fair value gap, almost coincided with the 79%. Right? So again, within that golden zone, I always talk about in between the 61.8 and the 88.6. This is where your smart money wants to buy, right? If you have your fibs placed in the right, in the correct way. If you have this thing, let me see if, where is it? If I click on it, I don't know where it's at. There it is. Unlock it. If you have it placed right here, it's at 50%. Okay, well, if you're a 50%, I don't know. Evidently there's some guy that makes a living that trades off the 50% fib. Well, I guess if this is how he places his fibs, maybe this is how he does it. But this is not how I place my fibs whatsoever. A little bit more strategic with them. And again, it's all about how, how it comes up, how it comes down, things like that. Let me see. Jesus. Need to lock that one now, too. You just need to lock everything. This right here. Okay, so if we were to pull this down to here, right, this was the high that it made, kind of. And this was a low. All right, 15 minute. In 15 minutes, I don't like having, I don't like using the wicks, but the wicks will tell you where to enter. So if you remove the wicks and you actually just put, the fib on the bodies of this huge thing going up, comes back down, what does it do? It hits a 61.8%. Boom. I guarantee you smart money bought there. People that were playing futures, the people that knew that they were doing, people that know the algorithm, that's where they bought. Right? So now that they bought there, we're waiting for the high to form. Alright? And of course, like I said, marked off, we had the 4-hour fair value gap. What's it do? Fills in the 4-hour fair value gap. And they probably got out then. Me, I was holding. I was holding the entire time until we got above that 41, 30, 30. But I'm replacing my fibs now. And that's not what I wanted to do. There we go. All right, so getting off work, 3 o'clock, coming up here, stop playing games right around this time, and pulls up. Like I said, I took out 90% of my trade off after it got above, after this huge spike. Why? Because I wasn't for sure if that was going to be it, and it was going to come back down and then start, making its way back downward, or if it was going to go back up. I really had no idea. I'm not that good of a trader. I'm not the smartest man in the world. I just know that when it seeks liquidity, and that's exactly what it did. When I tell you what it would do, it would spike through it and then pull back down. Why? Because people have their buy stops set right there. So it triggers the buy stops and then pulls them back. Why? So it can take their stop losses with them. And also anybody that was trying to sell right here and had very short stop losses, it took those people out too. So it took people out both ways. And as I was holding the entire time, I just take mine out and leave 10% on, and then leave my stop loss right around 40.40, and then now we're back up somewhere up in here. So luckily it did continue trading upwards, and it did, and now now that we have the fib in place, currently, it did reach the 1.5 or the 50% extension basically. And I'm going to leave these fibs here because I have a feeling these are going to be guidelines to where we're going to be going to next. You see the next up here, this is a daily fair value gap right here. The next green box up here. And as you can see, it's almost it's basically right around double of where we were at previously to the 227. Even though it says negative 127, this would be the 27. Yeah, I guess it'd be the 127. I put negatives just so I don't have to flip my chart. So as if you double click on your fibs, you go to style, you can have everything you want it to be, and you can go down here and you can hit reverse if you want, and it'll give you your extensions. But instead of me having those extensions, I just put negatives instead. That way it'll do the extensions for me without having to reverse them. So that's just the way I like to do it. So again, let me go back and let me lock that back in place for sure. So again, now we're looking at this is going to be the next magnet right here. Now that we're still looking at bullishness, the next magnet is going to be your next daily order block. All right. So if we go back to the day, actually no, it's just wait. It says 1 hour. I am wrong. I thought it was a daily order block. Maybe I should scrunch that in a little bit more. Alright. Sorry guys for the twisting and turning and pulling and kneeling and all that good stuff. Okay, so this is why I have this blocked off here. Alright, so you have, there it is, the red candle here at the bottom of the red candle. You have the big drop, right, and then the next candle right here that pops up. Alright, so here you have one big giant candle that goes all the way down with nothing that has yet to challenge it to go inside of it, coming from the upside, right? So this is going to be your next magnet, and that's why I have it fully marked out, because I knew that's where we were probably going to be going to next once we got above the 41.30. So where is that area at? I'm going to pull it a little bit closer just so I can tell that it is a 1 hour and not a daily, because I do have it marked. But we're looking at 44,000 next. All right. So there's probably going to be some shenanigans that's going to be happening right in between now and then. There did in the 4 hours of this. We're actually in the last 8 to 12 hours, or I'd say 8 for sure. We do have, well, we do have a fair value gap right here, but that fair value gap was just rebalancing the drop that it made, right? So when I talk about balancing, this is what I'm talking about. So it made that big drop, and that's why I laughed, because I knew it was just going to rebalance it anyway, because I knew we were going upwards. I knew. So, but now we have made a new fair value gap, a new 4-hour fair value gap, and that would be this guy right here. All right, we have already entered the 4-hour fair value gap. So this should be a propellant. If we're going to look at the 1 hour, this is also a propellant, because if we're looking at the 1 hour fair value gap, it goes from here to here, and it closes it in. So boom, there we go. We also have a breaker, but like I said, the bearish breaker probably is not going to do much, especially when you have a 4-hour fair value gap. This is dipping into a 1-hour fair value gap. This is closing it in, and if we're going to go down to a 5-minute time frame. Actually, you'd be looking at this guy right here. Let me get rid of this one. Actually, we'd be looking at this guy, right, the one that just made the low. So this would be, because you would have your high, right? Your low. Now I'd be waiting on your higher high. And if somehow it was to trade through that, then we'd be looking for bearishness, right? That's when we'd be looking for bearishness. But if we have a high, low, keeps going higher, what you do is you want to watch the top of that candle. Once it touches the top of it, you want to hope that it just rejects off of that, because that's going to be your order block, right? So, and that's why I think these candles may not have crossed just yet, because maybe it is looking for bearishness. So if we do see it starting to fall off this way, look for bearishness. But I think eventually we're gonna see this, and we're gonna see this push up, and at that case, this will be your order block or your breaker. And then once it, does whatever it's gonna do, and the price comes back down and returns back down to it, it's gonna take off. Why? Because you have people, smart money or whatever, who sold in this area, thinking it's probably gonna turn bearish. The algorithm turned on them, right? And it's gonna come back down to that area. That way they can mitigate, any kind of losses that they may have been holding. That way, if they didn't end up with any losses, that's how this game is played. That's how the algorithm is done. That's why it's all rigged. And you'll see it everywhere. If you watch it long enough and you see it long enough, you'll see. You see it all. You can see exactly where and how the big boys play this. So. Anyways, I just wanted to give an update on that, about my prediction, about it being at 41.33 and all that good stuff. If you think you learned something, you think this was good material, whatever, please do me a good, huge favor. Give me a good like, give me a good subscribe. Tell people about my videos, and you can also... Never mind. Yeah. I don't know. I got this box thing, and hold on, I don't even know if I can hold it up. Look, this thing, and you press little buttons on it, and just. Yeah. So it's kind of fun. So I don't even know what I'm doing now. Anyways, I hope you guys got something out of this at least. Become a Patreon if you can. I'm only asking for $3 a month to help keeping this channel going. Considering I do have subscriptions that I do pay for to make this happen. So I'm just asking you guys to just help me out just a little bit, and in the return that I try to give you as much knowledge as I can on understanding smart money in the crypto world. Considering most smart money lives in the forex world, not a lot of people have talked about smart money in the crypto world. I have noticed, and it's there. It's definitely there, and I want to continue bringing it to you guys and making sure that you understand that it is here. Okay, so that being said, I'll see you guys later, and always to remember to wear your pants.